What's up, Amelia from Revenge Rewired here. Today's story, absolutely wild. Hit subscribe so you never miss one. I met Daniel at a tech conference in 2011, back when their SN app for that was still a fresh joke and everyone thought they were building the next Facebook. He was pitching his enterprise software idea to anyone who would listen. And I was a UX designer, tired of working for other people's dreams. We got coffee, then dinner. Then 6 months later, we got married and founded CodeStream Solutions together. For 7 years, we built something real. I designed every interface, every user flow, every pixel of our project management platform. Daniel handled the back-end development and business operations. We were profitable by year 2. We landed our first enterprise client, a manufacturing company, with 2,000 employees in year 3. By year 5, we had 43 corporate clients and annual revenue hovering around $3 million. I thought we were partners in every sense of the word. The affair started sometime in 2022. I found out later it was with Madison, our marketing contractor, who was 12 years younger than me and had never met a selfie filter she didn't love. But what broke me wasn't just the betrayal of our marriage, it was what came next. 2 weeks after I discovered the affair, Daniel filed for divorce. 3 weeks after that, he informed me he was buying me out of CodeStream Solutions. "It's better this way," he said, as if we were discussing which restaurant to order from. "Clean break. You take money, I keep the company. We both move on." That should have been my first warning sign, his eagerness to remove me from the business we'd built together. But I was still reeling from the divorce, still processing the fact that he'd been sleeping with someone else while I worked 70-hour weeks to grow our client base. The discovery deposition happened on a gray morning in October, in a conference room that overlooked the bay but somehow still felt claustrophobic. Daniel sat next to his attorney, Trevor Harrison, a shark in a $3,000 suit, who specialized in protecting entrepreneurs in divorce proceedings. I sat with my attorney, Rebecca Moss, who I'd retained because she was known for being thorough and aggressive. But Daniel had come prepared with something I hadn't expected. An expert witness. Gerald Pemberton was introduced as a certified business valuator with 20 years of experience. He wore a tweed jacket with elbow patches and carried a leather briefcase that looked older than I was. He had evaluated hundreds of companies, Trevor explained, and was considered one of the top valuation experts in the state. "Mr. Pemberton," Trevor began, "you've conducted a comprehensive valuation of CodeStream Solutions. Can you walk us through your findings?" Gerald pulled out a bound report, 67 pages. I counted later and opened to a page marked with a yellow tab. "I've conducted a thorough analysis of CodeStream Solutions' financial records, client contracts, intellectual property, and market position." I felt my stomach drop. 200,000. We'd done $2.8 million in revenue last year alone. $200,000, Trevor repeated, as if I hadn't heard. "And can you explain why the value is so low, despite the company's apparent success?" "Certainly. Several factors contribute to the limited value. First, the software industry is highly competitive, and CodeStream's platform is essentially commodity software, nothing proprietary, that couldn't be replicated by competitors. Second, the client base is unstable. I reviewed the contracts and found that most clients are on month-to-month agreements with no long-term commitments. Third, the company's revenue has been declining over the past 18 months. He pulled out a chart showing a downward trend line. I squinted at the numbers. They were our numbers, but something about them looked wrong. "As you can see," Gerald continued, "revenue peaked at $3.1 million in early 2022 and has been steadily declining. Current annual run rate is approximately $1.4 million, with increasing customer churn and declining new client acquisition." "And this is based on the company's actual financial records?" Trevor asked. "Yes. I reviewed 3 years of tax returns, bank statements, QuickBooks records, and client invoices provided by Mr. Chen." Rebecca finally spoke up. "Mr. Pemberton, your valuation seems remarkably low for a company with enterprise clients and consistent revenue. Can you explain why you didn't apply a revenue multiple, which is standard in software valuations?" Gerald smiled patronizingly. "Revenue multiples are appropriate for growing companies with strong market position. CodeStream is a declining business with no proprietary technology and an unstable client base. The asset-based approach is more appropriate here. The company has 43 active clients," Rebecca pressed. "That client base alone has significant value. On paper, yes, But as I noted, these are largely month-to-month contracts. There's no guaranteed future revenue. Additionally, many of these clients are small to medium businesses that could easily switch to competitors like asanamonday.com or Microsoft Project. The customer acquisition cost versus lifetime value ratio is unfavorable. He was smooth, I'd give him that. Every answer sounded authoritative, supported by data, delivered with the confidence of someone who'd done this 100 times before. Trevor let Gerald's testimony settle, then turned to me. Mrs. Chen, I hope this clarifies the situation. CodeStream Solutions is not the goldmine you seem to think it is. The business has been struggling, revenue is declining, the market is saturated. My client is generously offering you $100,000, half of the actual value, to buy out your interest. Half of nothing is still nothing, Daniel added, and there was something smug in his voice that made my skin crawl. The company's barely surviving. I'm going to have to work my ass off just to keep it from going under completely. Trevor slid a settlement offer across the table. $100,000 paid over 12 months. You walk away clean. No future obligations, no risk exposure. Frankly, Mrs. Chen, you're getting the better end of this deal. You get cash with no risk, while my client is left trying to save a sinking ship. Rebecca started to object, but I put my hand on her arm. I'd learned during my 7 years building software, never react immediately, always think 3 moves ahead. This is a lot to process, I said carefully. I'd like some time to review the valuation report and consider the offer. Of course, Trevor said, and I could see he thought he'd already won. We're prepared to give you 2 weeks. After that, we'll need to proceed to litigation, which will only eat into whatever settlement you might receive. Daniel leaned back in his chair, already looking relieved. Sarah, I know this isn't what you wanted to hear, but I'm trying to be fair here. The company isn't worth what you think it is. Take the money, move on, start something new. I gathered my things slowly, maintaining a neutral expression. What neither of them knew was that ID stopped trusting Daniel 3 months ago, the moment ID discovered the affair. Because if he could lie about something as fundamental as fidelity, he could lie about anything. The day after I found the emails to Madison, I'd done something that surprised even me. ID logged into our company's QuickBooks account. I still had admin access since I'd been the one to set it up 7 years ago. ID started downloading everything. Every transaction, every invoice, every bank statement, every client contract. ID spent an entire weekend uploading it all to a secure cloud drive Daniel didn't know existed. Then I'd called my college roommate Priya, who worked as a financial analyst at a venture capital firm. I need a recommendation, I'd told her. The best forensic accountant you know, someone who specializes in business valuations and finding hidden revenue. That's ominously specific, Priya had said. Is Daniel just the name? Pry, please. She'd given me 2 names. I'd called both. The first was booked for 6 months. The second was Dr. Eleanor Vance, a forensic accountant with a PhD in accounting fraud detection and a track record of testifying in high-stakes divorce cases. I'd met Eleanor the following week in her downtown office. Unlike Gerald Pemberton with his tweed and leather, Eleanor was all business crisp suit, severe glasses, office that looked like a war room with whiteboards covered in financial flowcharts. Tell me about your company, she'd said. No small talk, no pleasantries. I'd walked her through CodeStream's history, our client base, our revenue trajectory. Then I'd told her about the divorce, about Daniel's eagerness to buy me out, about my suspicion that something wasn't adding up. Eleanor had listened without interrupting, taking occasional notes on a yellow legal pad. When I finished, she'd asked one question. Do you want to know the truth, even if it's bad for you? I want to know what I'm actually walking away from, I'd said. Good answer. Because here's what usually happens in these cases. The spouse running the business claims it's worthless, shows declining revenue, scares the other spouse into taking a lowball settlement. Then 6 months after the divorce is final, mysteriously, the business is thriving again. That had been 10 weeks ago. For 2.5 months, Eleanor had been working quietly, analyzing the documents I'd provided, filing subpoenas through her attorney contacts, interviewing former clients, examining our corporate structure. ID paid her $22,000 from my personal savings money. ID kept in an account Daniel didn't know about, left over from a UX consulting project I'd done on the side. And now, sitting in this deposition listening to Gerald Pemberton's valuation that painted my company as worthless, I had Eleanor's preliminary findings locked in Rebecca's office safe. Findings that told a very different story. As I walked out of the deposition, I heard Trevor say to Daniel, "That went perfectly. She'd take the offer." They always do when they see the expert testimony. I didn't look back, but I smiled to myself all the way to my car. Eleanor Vance's approach to forensic accounting was surgical. "Most people think I'm looking for one smoking gun," she'd explained during our second meeting. "But business fraud isn't usually one big thing. It's dozens of small things that create a pattern. My job is to find the pattern." She'd started with the basics, the documents I'd downloaded from QuickBooks. 3 years of transactions, invoice records, bank deposits, client contracts. Then she'd pulled additional records using her network of attorney contacts and subpoena power. Tax returns filed with the IRS, corporate filings with the Secretary of State, business licenses, trademark registrations. Here's what jumped out at me immediately, Eleanor had said during our third meeting, spreading documents across her conference table. "Your husband's expert claims revenue has been declining from $3.1 million to $1.4 million. But look at this." She pulled up 2 documents side by side, our QuickBooks income statement and our corporate tax return for the same year. The QuickBooks shows $1.6 million in revenue for 2023, but the tax return shows $1.4 million. That's a $200,000 discrepancy. Could that be expenses? I'd asked. No. Revenue is revenues. The money coming in before expenses. These should match. When they don't match, someone is either lying to the IRS or lying in the QuickBooks. Usually, people underreport to the IRS to avoid taxes. But your husband is underreporting in QuickBooks while accurately reporting to the IRS. That's backwards. What does that mean? It means he's hiding revenue from you by not recording it in the company books. The money is coming in, the IRS knows about it, but it's not showing up in the QuickBooks that he's using for the divorce valuation. Eleanor had dug deeper. She'd filed a subpoena for our business bank account records, not the QuickBooks entries, but the actual bank statements from the bank. When they arrived, the pattern became clear. "Look at this," she'd shown me during our fourth meeting. "In January 2023, there are 6 deposits to your business account that don't appear anywhere in QuickBooks." She'd gone through the entire year. Month after month, large deposits would appear in the bank statements, but not in QuickBooks. By her calculation, approximately $1.8 million in revenue had been received but never recorded in the company's internal accounting system. "But the tax returns show that revenue," I'd said, confused. "You said the IRS returns show $1.4 million. They show $1.4 million from CodeStream Solutions," Eleanor corrected. "But I found something else." She'd pulled out another corporate filing. 4 months before Daniel filed for divorce, he registered a new corporation called StreamTech Services, LLC, same registered agent as CodeStream, filed in Delaware, which makes it harder to trace. And here's the interesting part. Eleanor had shown me StreamTech's tax return, which she'd subpoenaed. StreamTech Services reported $2.7 million in revenue for 2023. Its business description: software development and project management solutions. Its primary clients. She pulled out a list. 70% overlap with CodeStream's client list. The realization had hit me like cold water. He's routing revenue through a second company. Exactly. Here's how the scheme works. CodeStream Solutions has 43 clients under contract. Those clients pay their invoices, but some of those payments, specifically the largest payments from the most valuable clients, are being deposited into StreamTech's account instead of CodeStream's account. The clients probably don't even know. They're paying invoices that look like they're from CodeStream, but the bank account number on the invoice belongs to Eleanor had walked me through the mechanics. Daniel would send invoices to our biggest clients' enterprise accounts, paying $50,000 plus annually using CodeStream's letterhead and branding. But the payment instructions would direct them to wire funds to StreamTech's bank account. The smaller clients, paying $5,000, $15,000 annually, would be invoiced normally, and their payments would go to CodeStream. The genius of this, Eleanor had explained, is that CodeStream still looks like an operating business. It has clients, generates revenue, files taxes, but all the profitable clients have been secretly moved to CodeStream, is left with the low-value clients, enough to look legitimate, but not enough to be worth much. She'd shown me the client analysis she'd done. Of CodeStream's 43 clients, 18 were actually paying StreamTech directly. Those 18 clients represented 68% of total revenue. The remaining 25 clients paying CodeStream represented only 32% of revenue. That's why his expert could credibly claim the company is worth only $200,000, Eleanor said. He's right that CodeStream as it appears on paper has declining revenue and low-value clients. What he's not disclosing is that the high-value clients have been systematically moved to a separate entity that you have no legal claim to. But Eleanor had found more. She'd subpoenaed Daniel's personal bank statements and credit card records. I wanted to see if StreamTech money was flowing back to him personally. And look at this. StreamTech's bank account showed regular transfers to Daniel's personal account, $15,000 monthly, characterized as owner distribution. Over 18 months, that was $270,000 in direct payments from the hidden company to Daniel personally. And look what else he's been spending StreamTech money on, Eleanor said, pulling out credit card statements. Dinner at Coastal every Friday night, that's a $300 per person restaurant. Hotel stays in Napa Valley. He was spending company money on Madison, I said, feeling sick. Not just Madison. He was living a lifestyle funded by revenue that should have been marital property. While telling you the business is failing, Eleanor had organized everything into a comprehensive report to 174 pages of analysis, bank records, tax documents, and evidence. The executive summary was devastating. CodeStream Solutions and StreamTech Services LLC, when analyzed together, generated $4.1 million in combined revenue in 2023. Daniel Chen systematically routed high-value clients to StreamTech while leaving low-value clients with CodeStream. This created the false appearance that CodeStream was declining, when in fact, the combined business operation was highly profitable. The fair market value of the combined business, using standard software industry multiples of 3 to 4x revenue, is between $12.3 million and $16.4 million. Mr. Chen's expert valuation of $200,000 represents less than 2% of actual value. The smoking gun, Eleanor said, pulling out one final document, is this email I found through Discovery. It was from Daniel to his accountant, dated 14 months ago, per our conversation. Make sure all invoices to enterprise clients over $50,000 annually are processed through Keep CodeStream invoicing limited to small clients only. Need to show declining revenue for CS in advance of divorce proceedings. Make sure tax filings are clean. IRS doesn't need to know about the corporate restructuring strategy. I'd read it 3 times. The phrase advance of divorce proceedings had made my hands shake. He'd been planning this for over a year, long before he'd even filed, probably around the time he'd started the affair with Madison. Will this hold up in court? I'd asked Eleanor. Sarah, I've testified in 91 cases. I've worked with the FBI on corporate fraud investigations. This report won't just hold up, it's going to destroy their entire defense. More than that, what your husband has done is fraudulent conveyance. He moved assets out of the marital estate deliberately to avoid dividing them in divorce. That's not just grounds for a larger settlement, it's potentially criminal. That had been 5 days ago. I'd spent the 2-week consideration period watching Daniel text Madison about weekend plans, knowing he thought he'd already won, knowing he was planning his future with money he'd stolen from our marriage. Now, sitting in Rebecca's office the morning our response was due, I watched as my attorney read through Eleanor's report for the second time. This is extraordinary, Rebecca said. I've handled complex business divorces before, but this level of planning, this degree of fraud. Sarah, your husband didn't just hide assets, he created an entirely separate company specifically to defraud you. Can we use this in court? Use it. This doesn't just win your case, it obliterates the fake valuation, the hidden company, the email about advance of divorce proceedings. When a judge sees this level of deception, they don't just split assets fairly, they punish the fraudulent spouse. Rebecca started making notes. We have a valuation hearing scheduled for next month. That's when we present this. I'll file an amended discovery motion compelling disclosure of We'll subpoena his accountant. That email shows the accountant was complicit. We'll bring Eleanor in as our expert witness to counter Pemberton, and we'll ask the judge to sanction Daniel for fraudulent disclosure and award you the majority of both companies. What about the $100,000 settlement offer? Rebecca smiled. What settlement offer? We're rejecting it today, and we're going to court. When that judge sees what Daniel has been hiding, $100,000 is going to look like the insult it actually is. The valuation hearing took place in Judge Michael Rodriguez's courtroom on a cold November morning. Judge Rodriguez had been on the bench for 18 years, former corporate attorney, known for being meticulous and having zero patience for games. He was exactly who we wanted. Daniel and Trevor Harrison sat at the defendant's table, both looking confident. Gerald Pemberton, their expert, sat in the first row of the gallery with his leather briefcase. Daniel wore a navy suit and had clearly practiced looking stressed and overworked, part of his struggling entrepreneur persona. I sat with Rebecca at the plaintiff's table. Between us were two file boxes containing Eleanor's report, supporting documentation, and exhibits. Eleanor herself sat in the gallery behind us, ready to testify. Judge Rodriguez reviewed the motions before him. We're here on the issue of business valuation for CodeStream Solutions. I've reviewed both parties' expert reports. Mr. Harrison, your expert, valued the business at $200,000. Ms. Moss, your expert, valued it substantially higher. Let's start with the defendant's expert. Call Mr. Pemberton. Gerald took the stand with the confidence of someone who'd done this dozens of times. Trevor walked him through his credentials: certified valuation analyst, 20 years of experience, over 300 businesses evaluated. Mr. Pemberton, Trevor began, you conducted a comprehensive valuation of CodeStream Solutions. Can you summarize your findings? Yes, based on my analysis of the company's financial records, client base, market position, and revenue trends. And you based this on the company's actual financial records? Yes, I reviewed 3 years of QuickBooks records, tax returns, and bank statements provided by Mr. Chen. Trevor nodded, satisfied. Thank you. No further questions. Rebecca stood slowly. Mr. Pemberton, in your valuation, did you review all entities owned or controlled by Mr. Chen? Gerald looked slightly confused. I was asked to value CodeStream Solutions. That's the company in question. Did you ask Mr. Chen if he owned or controlled any other business entities? I don't recall specifically asking that question. My focus was on CodeStream. So, if Mr. Chen owned another company, say, one that provided similar services to similar clients, you wouldn't necessarily know about it. I suppose not. But did you interview any of CodeStream's clients as part of your valuation? No, that's not standard practice. Did you request bank statements directly from the bank? Or did you rely on statements provided by Mr. Chen? Gerald shifted in his seat. I reviewed the statements provided by counsel. That's standard procedure. So you never verified that the statements were complete. You never checked to see if there were deposits or transactions that weren't included in the materials you received. The statements appeared complete and were consistent with the QuickBooks records. Rebecca walked to our table and picked up a document. Your Honor, I'd like to introduce Exhibit A, CodeStream Solutions Corporate Tax Return for 2023, filed with the IRS. She handed copies to the judge, Trevor, and Gerald. Mr. Pemberton, you testified that CodeStream had revenue of $1.4 million in 2023. Is that correct? Yes, according to the QuickBooks records. But this tax return shows revenue of $1.6 million. That's a $200,000 discrepancy. Can you explain that? Gerald studied the document. I watched his confidence start to crack. There could be various accounting reasons for discrepancies between internal books and tax filings, such as timing differences, accrual versus cash basis accounting, revenue recognition policies, or it could be that Mr. Chen simply didn't record all revenue in QuickBooks. Isn't that the simplest explanation? I suppose that's possible, but Rebecca didn't let him finish. Mr. Pemberton, were you aware that Mr. Chen owns another company called StreamTech Services LLC? The courtroom went silent. Gerald's face went pale. I know. I was not aware of that. Were you aware that StreamTech Services provides software development and project management solutions, the exact same services as CodeStream Solutions? No. Were you aware that StreamTech Services reported $2.7 million in revenue in 2023? Trevor was on his feet. Your Honor, this is outside the scope of Mr. Harrison, Judge Rodriguez said sharply. Sit down. I want to hear this. Continue, Ms. Moss. Rebecca pulled out another exhibit. This is StreamTech Services Corporate Tax Return, filed with the IRS, $2.7 million in revenue. And here's the interesting part. Mr. Pemberton, 70% of StreamTech's clients are also listed as CodeStream clients. In fact, many of them are CodeStream's highest value accounts. She walked Gerald through the evidence. Client lists showing overlap. Bank statements showing large deposits to StreamTech from clients supposedly under contract with CodeStream. Invoices sent on CodeStream letterhead but directing payment to StreamTech's account. So, Mr. Pemberton, if CodeStream and StreamTech are actually one integrated business operation, what would the combined revenue be? Gerald looked at the documents, his hands actually shaking slightly. $4.1 million. Approximately. And if you were valuing a software company with $4.1 million in annual revenue, what would be the fair market value using standard industry multiples? Software companies typically trade at 3 to 4 times revenue. So, $12 to $16 million. $12 to $16 million. Not $200,000. If they were properly integrated, yes. But thank you, Mr. Pemberton. No further questions. Trevor tried to rehabilitate his witness on redirect, but the damage was done. Gerald's valuation had been based on incomplete information Daniel had deliberately withheld. Judge Rodriguez looked at Gerald. Mr. Pemberton, did Mr. Chen inform you about StreamTech services when you conducted your valuation? No, Your Honor. Did his attorney? Gerald glanced at Trevor. No, Your Honor. Step down. Rebecca stood. Your Honor, we'd like to call Dr. Eleanor Vance as plaintiff's expert witness. Eleanor took the stand and was sworn in. Rebecca established her credentials, Ph.D. in accounting, former FBI forensic accountant, 91 divorce cases, expert in fraud detection and business valuation. Dr. Vance, did you conduct an investigation into Mr. Chen's business interests? I did. Over a 10-week period, I conducted a comprehensive forensic accounting analysis of all entities owned or controlled by Daniel Chen, including CodeStream Solutions and StreamTech Services LLC. What did you discover? Eleanor pulled out her report. I discovered that Mr. Chen has been systematically routing high-value client revenue to StreamTech Services while leaving low-value clients with CodeStream Solutions. This created the false appearance that CodeStream was declining, when in fact the combined business operation was highly profitable and growing. She walked through the evidence methodically. Bank statements showing deposits to both entities. Client contracts showing overlap. Tax returns showing combined revenue of $4.1 million. The email to Daniel S. accountant discussing the strategy of showing declining revenue for CS in advance of divorce proceedings. That last part is critical, Eleanor said. This wasn't an organic business decision. This was a deliberate strategy to hide assets in advance of divorce. Mr. Chen began routing revenue to StreamTech 14 months before he filed for divorce. This was premeditated fraud. Rebecca handed Eleanor another exhibit. Dr. Vance, what is this? This is an analysis of payments from StreamTech to Mr. Chen personally. Over 18 months, he took $270,000 in distributions from StreamTech. So while telling his wife the business was failing, Mr. Chen was taking hundreds of thousands of dollars in distributions and using company funds for personal expenses. Correct. Rebecca turned to the judge. Your Honor, we have 43 exhibits supporting Dr. Vance's findings: bank records, tax returns, corporate filings, client contracts, email communications, and credit card statements. The evidence is overwhelming that Mr. Chen created StreamTech specifically to hide assets from his wife, systematically moved the most valuable clients to that entity, and has been taking distributions from the hidden company while claiming poverty. Judge Rodriguez looked at Trevor. Mr. Harrison, I'm going to give you a chance to respond, but I'll warn you, what I'm seeing here looks like fraud. Extensive, deliberate fraud. Trevor stood, and for the first time since I'd met him, he looked uncertain. Your Honor, if I could request a short recess to confer with my client. No recess. Do you have evidence that contradicts Dr. Vance's testimony? Your Honor, there may be legitimate business reasons for the corporate structure that Mr. Harrison, IVA, read the email where your client explicitly states he is showing declining revenue in advance of divorce proceedings. What's the legitimate business reason for that? Trevor had no answer. Judge Rodriguez turned to Daniel. Mr. Chen, stand up. Daniel stood on visibly shaking legs. His face had gone completely white. Did you own StreamTech Services during your marriage? Yes, but it was. Did you disclose this entity in your financial declarations? I didn't think it was relevant to Mr. Chen. I asked a yes or no question. Did you disclose StreamTech Services in your financial declarations? No, Your Honor. Did you testify in your deposition that CodeStream Solutions was your only business interest? Daniel's lawyer whispered something to him. Yes, but I can explain. Did you route revenue from marital clients to StreamTech while claiming CodeStream was failing? The business structure was set up for tax purposes. Judge Rodriguez held up the email. Mr. Chen, I'm reading your own words here. Need to show declining revenue for CS in advance of divorce proceedings. That's not tax planning. That's fraud. The courtroom was silent. I watched Daniel's expert witness, Gerald Pemberton, quietly gather his briefcase and walk out. He literally stood up and left while the judge was talking. Mr. Chen, Judge Rodriguez continued, I've been on this bench for 18 years. I've seen people hide assets in divorce cases, but creating an entirely separate company, systematically routing revenue to it, taking distributions from it, all while testifying that your only business is worth $200,000. That's one of the most egregious cases of fraud I've encountered. He turned to his clerk. I want an order to show cause why Mr. Chen should not be held in contempt. I want StreamTech services added as a marital asset. I want complete financial records for both entities going back 3 years. And I want Mr. Chen's accountant deposed within 10 days. That email suggests the accountant was complicit in this scheme. Trevor tried once more. Your Honor, your client, committed fraud, Mr. Harrison. He lied under oath, concealed assets, and presented a fraudulent expert valuation. I'll be referring this matter to the State Bar regarding your conduct as well, because I find it hard to believe you didn't know about StreamTech. Trevor's face went pale. Judge Rodriguez looked at Daniel. As for Mr. Pemberton's valuation of $200,000, I'm rejecting it entirely. Dr. Vance's analysis shows the combined business value is between $12 and $16 million. Given the level of fraud here, I'm strongly inclined to award Mrs. Chen significantly more than 50% of that value. The next 6 weeks were a legal avalanche. StreamTech's complete financial records were subpoenaed. Daniel's accountant was deposed and, facing potential criminal charges for complicity in fraud, provided detailed testimony about Daniel's instructions to hide revenue. Trevor Harrison withdrew from the case, citing irreconcilable differences with the client code for, I am not going to jail for you. Daniel hired a new attorney who immediately tried to negotiate a settlement. Rebecca told them to submit an offer. They came back with $5 million cash to buy out my interest in both companies. Rebecca rejected it without consulting me. We're going to trial, she told me. The judge is furious. We're going to get more. The final hearing took place in early December. Judge Rodriguez had reviewed all the evidence, all the depositions, all the financial records. His ruling was delivered with barely contained anger. This court finds that Daniel Chen engaged in systematic fraud to conceal marital assets. He created StreamTech services specifically to hide revenue from his wife. He routed $2.7 million annually to this entity, while claiming his only business was failing. He took $270,000 in distributions, plus $118,000 in personal expenses from the hidden company. He testified falsely in deposition about his business interests, and he presented an expert valuation based on deliberately incomplete information. Judge Rodriguez continued, outlining the consequences as a sanction for this fraud, and to deter similar conduct. The court awards Mrs. Chen 75% ownership interest in both CodeStream Solutions and StreamTech Services, LLC. The courtroom erupted. Daniel's new attorney tried to object, but Judge Rodriguez cut him off. The combined business operation, based on Dr. Vance's credible testimony, is worth approximately $14 million. Mrs. Chen is awarded 75% of that value, $10.5 million. Mr. Chen has 90 days to either buy out Mrs. Chen's interest at that valuation, or the court will appoint a receiver to sell both companies and distribute the proceeds. He wasn't done. Additionally, Mr. Chen is ordered to pay Mrs. Chen's legal fees, the final tally. I received $10.5 million in cash when Daniel bought out my ownership stake. I also received an additional $229,000 in fees and sanctions. Daniel was left with 25% ownership of businesses that were now publicly associated with fraud, facing potential criminal prosecution and IRS audit. His accountant was sanctioned by the state board and had his CPA license suspended pending investigation. Gerald Pemberton, the expert witness who'd valued our company at $200,000, had his name attached to one of the most publicly embarrassing valuation mistakes in recent state history. Trevor Harrison faced a state bar investigation for his role in presenting fraudulent evidence. The criminal investigation took 6 months. Ultimately, Daniel pleaded guilty to filing false financial disclosures and tax fraud. He received 3 years probation, community service, and had to pay $380,000 in back taxes and penalties to the IRS. As for StreamTech and CodeStream, I sold my 75% stake back to Daniel over 18 months through a structured settlement. The total payout, $11.2 million. After accounting for the business's continued profitability during the settlement period, I sat in my new home office converted bedroom in a Victorian I'd purchased in cash and looked at the final wire transfer confirmation, $11.2 million, from a business Daniel had claimed was worth $200,000. Eleanor called me that afternoon. "Did you get the final payment?" "I did. How does it feel?" "Surreal. I keep thinking about that deposition. His expert witness sitting there so confidently, telling me my company was worthless." "That's how these schemes work," Eleanor said. "They count on you being intimidated by experts and legalese. They count on you thinking the system is too complicated to understand. They count on you being too exhausted or emotional to question the numbers." "I almost didn't hire you," I admitted. $22,000 seemed like so much money. I thought, what if I'm wrong? What if there really is nothing and I'm just being paranoid? "But you trusted your instincts." "I knew what our business was worth. I'd built it. I'd designed every feature, talked to every client, reviewed every contract. When they said it was worth $200,000, something in me just knew that was wrong." "That's why you won," Eleanor said. "You knew your business, you trusted yourself, and you were willing to invest in finding the truth." The last I heard, Daniel was running a significantly diminished version of the combined business, struggling to keep clients after the fraud became public record. Several of our largest clients terminated their contracts when they learned they'd been invoiced through a fraudulent entity. His relationship with Madison ended 6 months after the divorce was finalized. Apparently stolen money and criminal prosecution weren't as attractive as she'd thought. As for me, I used part of the settlement to start a new company at UX design consultancy focused on helping other women in tech navigate business ownership and divorce. I speak openly about my experience and encourage women to trust their instincts when something feels wrong. I invested the majority of the settlement conservatively, working with a financial advisor. Eleanor recommended someone who specialized in helping divorce winners protect their assets, and I learned a lesson I'll never forget. When someone tells you your work is worthless, when they bring in experts to diminish what you've built, when they offer you scraps and call it generosity, trust yourself. You know what you created. You know what it's worth. The truth is in the numbers. It always is. You just have to be willing to look at the right numbers, not the ones they want you to see.